Hey, what's wrong?
My credit card bill.
Okay, again. Kalyan, what is wrong with your credit card bill?
That it exists? How can it be more than my monthly salary?
Because it is for our joint usage.
Yeah, Gunjan, you used my credit card again. We need to fix our finances.
You are right. We are so indisciplined, especially you.
Wow.
I know, right? I mean, let's just sit down today and make a plan on insurances to buy, investment to make, and budgeting.
Let's do it now. Chala jao.
Okay, so how do we start?
By becoming aware of our financial situation. In short, analyzing our income and determining what we should do. So just the way you love to put so many rules on me, let's start with 50-30-20 rule for our financial planning.
And what is this 50-30-20 rule?
So our income can be divided into three parts: needs, wants, and investments. 50% can go towards the needs, which is electricity bill, house rent, groceries. Then 30% can go towards wants like Lonavala trip or going to restaurant, the cool sofa we saw online, all of those things, right? And the 20% towards the investments.
Nice. So to grow our investment faster, we can reduce our wants to 20% and increase our investment to 30%. Also, good budgeting will help us save money. I guess post saving for our emergency funds, all our money should ideally go towards investments. Perfect. Now let's talk about our expenses. One ongoing home loan of this house with monthly EMI of 20,000 rupees. Then our electricity bill is around 2,000 rupees. Car petrol expenses around 5,000 every month. Then Wi-Fi ka 2,000 rupees. OTT platforms 1,500. Both our mates take around 7,000 rupees. And society maintenance is also 2,000 rupees. And groceries cost us 8,000 rupees. Also, we need to reduce our junk, okay? And yes, let's say miscellaneous 5,000 safe side.
Okay, done. And the gas cylinder is 1,100. Now, we could not even finish one gas cylinder last month. That means we are ordering a lot of food from outside, which means we need to reduce our food delivery online expenses.
Yeah, right. So our total income is 1,20,000, out of which expenses add up to 54,000 every month, which is almost 50%. So we are left with 66,000, out of which minimum 24,000 should go towards our investment. Remaining we can use for our wants like shopping, trips, movies and stuff like that.
So we need rupees 54,000 every single month. Now 54,000 into 12 would be 6,48,000, which is approximately 7 lakh rupees. Now 7 lakh rupees a year is what we need to survive in case we lose our job or COVID-like situation happens where we lose the employment or the income or everything. Now this is the emergency fund. We have to keep it safe. We can keep it in the bank account and we can make sure that we do not spend it, and our medical expenses will be taken care of, right? So this may be the safest thing to do with our emergency.
Let's invest this emergency fund in a bank so that our regular needs or medical expenses can be taken care of easily.
Now let's move on to where and how to invest. Now because we both are earning, we need a term insurance for people who are relying upon us and do not have an income source, which means your parents and my parents. So your parents will get the benefit of your term insurance and my parents will get a benefit of my term insurance.
Kalyan, both your and mine are our parents, not tere papa, mere papa.
Okay, yeah, understood.
Good. Now term insurance coverage should be 25 times of our annual income.
2 crores each is a safe bet and 12,000 per month is the premium amount.
Correction, 12,000 plus 12,000. Don't forget, we are in this together.
Yeah, true. Step 2 is done and completed. Now we move on to step 3, which is health insurance.
We both are in our late 20s and we don't have any prior health issues and we are not smokers. Also, the sum insured should be more.
Kitna more? By the way, we both have a corporate health insurance of 2 lakh rupees each.
See, we have corporate health insurance, but what if we are in our notice period or we lose our job, then this insurance will not be available for us, making us use our emergency fund. So let's not do that and get a proper health insurance for a couple.
So we need 2.5 lakh each as a coverage amount.
So buy a couple health insurance for us na. See, ideally we should have invested as early as possible in our early 20s, but better late than never. Abhi premium bhi kam dena padega kyunki age kam hai.
Exactly, and 1,000 rupees per month would be 12,000 rupees annually.
सब अच्छे से देख ले and we can go for the same.
Yes, done. Step 3 is done, and now we move on to step 4, which is goal-based investment.
Okay, I can think of 3 goals. Goal 1. I want our kid to study in an amazing school, which can be quite expensive. So let's start investment for the same. Goal 2 is our retirement and goal 3 is Europe trip after 5 years. So for our kids study, we can start investing in the guaranteed saving plans. It will be amazing for this goal.
What is that?
So basically it is a plan to receive guaranteed income along with a life cover. So let's say at the age of 30 we start this plan and we select 10 साल का deferment period. It can be anywhere from 1 year to 10 years, and because we choose 10 years, so at the age of 40 we will start receiving the guaranteed income for the next 10 years. This way we can ensure a good education for our kid.
Deferment period is the period where we keep paying for the product, and once the period gets over, that is when we start receiving the benefits, right?
Correct. In this case, post 10 years, we will start receiving the income.
Yes, plus life cover भी मिलेगा, plus dual tax benefits भी मिलेंगे under section 80C and section 1010D. तो ये तो हमारे लिए perfect है.
Yes, true. Also, we will get double monthly income for the second half of the payout or lump sum payout as well. Depends on us and the need.
Perfect. अब आती है रिटायरमेंट प्लान करने की बारी.
That can be planned using NPS.
National Pension Scheme. Heard about this year, and plus we get tax benefits as well for the tier 1 account.
Let's go for equity as we both are risk takers and the returns we will generate will be amazing. Plus we can get pension post 60 using the NPS.
Perfect. Retirement is sorted. Now because we do not understand stock analysis, let's go for mutual funds so that we can plan our Euro trip.
We need a third bank account which is a joint account, and all our SIPs for the vacation will be deducted from that account.
Perfect. Euro trip is sorted.
Now what is next?
ULIP.
अब ये क्या है?
ULIP means Unit Linked Insurance Plan, where basically it is an insurance cum investment plan where the insurance company basically designs a well diversified portfolio for us.
Including investment? That is amazing. But how?
So the yearly premium that we pay to the insurance company is then invested by the insurance company into the money market, which is debt and equity in a particular ratio.
How is this ratio decided?
We can choose based on risk profile, and I feel that we can take more risk so we can invest more in the equity, and the returns that are generated are tax free under section 80C of Income Tax Act.
Nice. But what about the insurance?
So in case anything happens to me, you will get 10 times the sum insured under ULIP. So looks good to me.
Shut up, Kalyan. Don't say that.
Sorry.
So ULIP it is then. Done यार बस आज के लिए बहुत हुआ. I'm so happy that we are together and working as a team.
इसी बात पे पिज्जा
With extra cheese on top.
तू भी सही चीज है यार.
So guys, इसी बात पे don't forget to like, share and subscribe to this channel, and also in the comments below do let us know which topic would you want us to pick next. Till then, stay safe and invest smartly.